The Kansas City housing market is starting to feel weird. On one hand, we're seeing homes fly off the market, multiple offers gone in less than 24 hours, but at the same time, inventory is rising and in certain areas, homes are sitting for weeks without a single showing. So what's really happening? Is the market cooling, or are we just seeing the early signs of a shift? In this video, we're breaking it all down. We'll look at Zillow's latest national forecast, dive into new data from the Kansas City Business Journal, and then zoom into what's really going on here, neighborhood by neighborhood. By the way, I put all this together in a free monthly email, so if you want to stay in the know with the KC housing market, just click the link down below to sign up. And as always, if you're thinking about buying, selling, or relocating, you can book a call with the team at any time. Okay, let's start with the big picture, because if you've only read the headlines, you might think the entire housing market is on the verge of collapsing. Zillow just released its newest forecast, and for the first time in years, they're calling for a drop in home prices of 1.7% nationwide between now and March of 2026. Now, that might not sound huge, but it's a major shift in tone. And to understand how dramatic this is, we have to look at how quickly their outlook has changed. Back in January, they predicted prices would rise by nearly 3%. By February, that number dropped to 1.1%. Then in March, it dropped again to 0.8%. And now they've gone full-blown bear. It's the kind of pivot you don't see often from a platform like Zillow unless something big is happening. So what's changed? Well, outside of macroeconomic factors, let's look at the real estate market. First off, inventory is up. In many markets, especially across the Sun Belt, we're seeing a flood of new listings. That means buyers suddenly have more options and more leverage. Second, affordability is still a massive hurdle. Home prices skyrocketed more than 40% during the pandemic. Mortgage rates have more than doubled since 2021. The average payment on a typical home now eats up over a third of the median household income. And when that kind of pressure builds up, something has to give. Now, Zillow is also calling out weakening demand in key migration markets. Places like Phoenix, Austin, and parts of Florida, cities that saw huge surges in both population and prices, are now seeing demand slow dramatically. Homes are sitting longer, price cuts are becoming more common, and in some cases, values are already slipping. So yes, on the national level, things are shifting. And this matters even here in Kansas City, because when national headlines start turning negative, buyer psychology changes. People get hesitant. They worry about overpaying. Sellers start second-guessing their pricing strategy. It creates a sort of feedback loop where everyone starts waiting to see what everyone else will do. But here's the thing, real estate has always been hyperlocal. What's happening in Boise or Miami doesn't always reflect what's happening here in Kansas City. And while we're absolutely seeing signs of a slowdown, we're also seeing neighborhoods where demand hasn't cooled at all. So let's bring this conversation closer to home. So what are people saying about the Kansas City housing market? According to the Kansas City Business Journal and Redfin, homes here are sitting on the market longer than they were a year ago. In March, the median days on market was 34. That's up from 27 this time last year. And yes, on paper, that suggests the market is cooling. But if you've been house hunting lately, that's not the story you're living. We've been working with clients across the metro all spring. Just last weekend, we beat out 6 other offers on one home and lost another that went under contract in less than 12 hours. So how do you square that with what the data is saying? Well, like everything in real estate, it depends on where you're looking. See, that 34-day median includes everything. It blends in homes that are sitting because they're overpriced, outdated, or poorly marketed. It also includes new construction, which tends to have a higher days on market just by the nature of the build process. And according to Redfin's senior economist, there's another factor at play. They said that there's a growing disconnect between what sellers think they can get for their homes and the direction the market is actually moving. In other words, some sellers are pricing like it's still 2021 and buyers just aren't biting. By the way, if you want to know what your home is worth, you can find out by clicking the link in the description. So yes, the average days on market is creeping up, but when we zoom in on where people actually want to live right now, the neighborhoods that are still high in demand, the story changes fast. So that's exactly what we did. We broke down the latest data city by city, neighborhood by neighborhood, and what we found paints quite a different picture. Okay, so we pulled the most recent year-over-year data from the Kansas City Metro comparing March 2024 to March 2025. Now, earlier I mentioned the Kansas City Business Journal citing a median of 34 days on market, and that stat came from Redfin. But here's the thing, you'll see quite different numbers depending on where you're pulling from. And in my opinion, the most accurate data comes straight from the Kansas City Regional Association of Realtors. So that's where we're pulling from today, their March report, and it tells a slightly different story. Let's start with the overall picture, combining both resale and new construction. In March of last year, the median sales price across the metro was $285,000. This year, it's up to $300,000. So despite all the talk of a slowdown, home values are still climbing. Now, inventory is also up just a bit, from 6,124 active listings last March to 6,560 this year. And as for days on market, not much movement. We went from 50 days to 52. That's a 2-day increase, which hardly signals a massive shift. But it gets more interesting when you break it down between new homes and resale. On the new construction side, there's actually a bit of a curveball. Median home prices have dropped from $535,000 last year to $495,000 this year. That's a significant price adjustment, and it reflects what we've been seeing on the ground. Builders are getting more competitive with their pricing, and it's working. In fact, new homes are moving faster now than they were this time last year. Last March, the average new build sat on the market for 167 days. This year, it's down to 119. That's a pretty big shift. And even though inventory is down slightly by around 100 homes, buyers are clearly responding to those better price points. Okay, now let's talk resale, which is the bulk of the sales here in Kansas City. This is where we see the most noticeable softening. The median sales price for a resale home is up from $265,000 last year to $280,000 this year. But at the same time, days on market have climbed from 36 to 44 days. And inventory is also up from 4,592 to 5,142 homes. So yes, homes are taking longer to sell, and yes, there are more options out there, but prices are still trending upward. And a move from 36 to 44 days on market doesn't scream crash, it's more of a reset towards something closer to normal. Still, even this view is too broad to give us a full picture, because what's happening in a suburb like Lee Summit might look very different from what's happening in, say, Brookside or Overland Park. When you really zoom in on the Kansas City Metro, things start to look a lot less like a cooling market and a lot more like a split market. Yes, some areas are slowing down, others are still red hot. Let's start in Kansas City, Missouri. Over the last 30 days, homes here had a median days on market of just 14. That's a far cry from the metro-wide average. The average days on market was 44, which means some homes are sitting longer, but when they're priced right and in the right location, they're gone fast. The median list price was just under $275,000 and homes sold for about that same number. So buyers are still coming in at asking and sometimes a little over. Now, if we zoom into, say, Brookside, one of the most sought after neighborhoods in the city, things are even more competitive. Over the past month, the median days on market was just 3. And the average days on market was 17, which tells you even the slower ones are not lasting long. And here's the kicker. Median sales prices are higher than list prices. Homes listed at $545,000, but we're selling for $559,000. That's not a cooling market, that's pure demand. Now let's flip over to Kansas City, Kansas. We're seeing a very different pace here. Median days on market is 17, average is 44. So while some homes are moving quickly, others are lingering a bit longer. List to sale prices are slightly below asking. Median list price was $229,000 and the median sale price came in at just $225,000. Still active, but not as intense. Okay, now let's head south to Leawood, where higher price points and luxury homes are the norm. Homes here are still moving with a median days on market of just 10. Average days on market is 35, and interestingly, homes are still selling above list. The median asking price was $675,000, and they're selling for about $680,000. So yes, even in the luxury market, buyers are still stepping up. Now, Overland Park is a tale of two markets. In South OP, the median list price and sale price are flat at $610,000. The median days on market in South OP is just 3 days, and the average is 43. So again, there's some variability, but you have to keep in mind that there's a lot of new construction in South Overland Park. Meanwhile, in North OP, it's even more competitive. The median list price with $360,000 and homes are selling for about $375,000. Median days on market, again, just 3, and the average is 13. That's heat. Meanwhile, Lee Summit is another strong performer. Median days on market, 3, average days on market, 41. Homes are selling right at list price, $415,000. Inventory is healthy with 260 listings over the last 30 days. It's competitive, but buyers still have options. Just east of there, Blue Springs is similar. Homes listed at $310,000 are selling for exactly that. Median days on market is 18 and average is 33, so still competitive, but a bit more breathing room compared to Johnson County. And up north in Liberty, we're seeing a little more balance. Median days on market is 7 with an average of 36, but list prices are slightly above what the homes are selling for at $407,000 versus $397,000, which tells us buyers are negotiating a bit. But demand is still solid, especially for move-in ready homes. So what's the takeaway from all this? The market isn't just one story. It's a bunch of smaller stories all happening at once. Some neighborhoods are cooling slightly, some are holding steady, and others still red hot with multiple offers and rising prices. It all depends on where you're looking and how dialed in you are to the local dynamics. So where does this leave us? The answer is right in the middle of a shifting market. The Kansas City housing market isn't crashing, it's not frozen, but it's not red hot across the board either. What we're seeing is a market that's recalibrating, adapting to higher interest rates, adjusting to affordability challenges, and becoming more balanced between buyers and sellers. Yes, inventory is up. Yes, homes are sitting longer. And yes, buyer demand has pulled back slightly in certain areas. But at the same time, prices are still rising. Homes in the most desirable neighborhoods are still going fast, and competition is still fierce, especially for homes that are well priced and move-in ready. So if you're a buyer, this is actually a more strategic market. In some cases, you have more options, a little more time, and in some areas, even a bit of negotiating power. But if you're targeting a competitive neighborhood like Brookside, Overland Park, or Lee Summit, you still need to be ready to move fast and write a strong offer. If you're a seller, pricing is everything. This isn't 2021 anymore. You can't just throw a number out there and expect bidding wars every time. But if your home shows well and you're priced right, there are still plenty of buyers out there ready to make a move. At the end of the day, the big story here is that Kansas City is still strong. We're not seeing the dramatic corrections that are playing out in other markets. Instead, we're seeing a city with stable demand, steady growth, and pockets of intense competition depending on where and what you're selling. So if you're trying to figure out your next move, you don't need to time the market perfectly. You just need the right strategy and the right local insight. And that's exactly what we're here for. Whether you're thinking about buying, selling, or relocating to Kansas City, we put together some free guides to help you make smart moves in this market. You'll find them linked below. Grab the one that fits your journey or download all 3 if you want the full picture. And as always, if you want to talk about your specific situation or get a clearer sense on what's happening in your neighborhood, you can book a call with our team at any time, and we'd love to help. Thanks for watching, and we'll see you on the next one.